Today. I'm Kimberly. I'm just facilitating the webinar today. So I'll be lurking around in case anyone's got any technical issues. Let me know in the chat if everybody can hear, everybody can see. Just a thumbs up would be great. Just also to let you know that the session today will be recorded and also the recording and the slides will be sent out after the session. So if you can't make the whole session, that's okay. The way we're going to structure it, we're going to run through all the information we have today, and then we're going to have a Q&A at the end. However, please do feel free to use the Q&A right along the top there. Use the Q&A if you want to ask a question as we go along. Just to introduce those on the call from Smart Data Foundry, we have Charlotte, who will be running the start of the session. She's our head of marketing, and Hui will be then doing the demonstration. So he's head of our public engagement. So no, that's me. Head of oh God, Hui, I've just forgotten your full job title.
Public sector engagement.
Public sector, sorry. So clearly I've not had enough tea this morning, and my summer berries iced tea is not cutting it. And then we have Tim, who works with Huey, and he'll be able to answer some of the questions. And we also have Harry, who will be answering any of the technical questions. He's our data scientist. So I'm just going to pass over to Charlotte, and she will run you through anything. And then, yep, I'll pass over now.
Good morning, everyone. Thank you for joining us on this beautiful, beautiful sunny day. Well, at least I hope it's as sunny for you as it is up here for us in Edinburgh. So as Kimberly mentioned, I'm Charlotte. I'm the head of comms at Smart Data Foundry. I'm joined today by Hui, who's head of public sector engagement, and my colleague Tim, who works in outreach and business development with us. And also have Harry here to answer any of your data science questions. So for those of you who haven't met Smart Data Foundry before, we are a not-for-profit subsidiary of the University of Edinburgh. We were founded in 2022 with the mission of opening up financial data for good. What that means is we work with organisations in the private sector to act as financial data partners. And then what we do is we open that data up for research, for policy, and also for service delivery. You can see here a kind of range of logos of organisations that we work with, including Scottish Government, Edinburgh Council, Council in East Renfrewshire, and also some work with the Low Pay Commission and the Productivity Institute as well. So there are lots of use cases and applications for financial data, and you know, I think that's kind of represented there by the range of some of the organisations that we're working with. So what we're talking about financial data, particularly today, consumer finance data, because we're here to talk about benefits income, our consumer finance data is provided by NatWest Group. They're our primary data partner. The data is derived from current account transactions for NatWest Group customers. These are all anonymised, categorised and aggregated into weekly summaries that we receive. So we get 5 million customers every week sent over to us from NatWest Group. So those customers are in Great Britain and they're all aged 18 or over. That 5 million sample is from October 2023, and prior to that, from May 2019, it was a sample of 1.2 million. Each customer is effectively anonymised prior to being sent to us, and is given a pseudo ID, which remains persistent throughout these weekly data transfers. And that's really important because it allows for longitudinal analysis of the data. And whilst the data is derived from transactions, we don't get those individual transactions. What we receive is income and expenditure data over 40 subcategories. And that includes things like income from salary, income from individual benefit types, expenditure on energy bills, rent or mortgage, leisure activities as examples. And we also receive things like negative balance events and certain demographic information, such as their age band, their sex, and their geographic location down to the data zone. So to show you what we mean by these categories, here is the kind of categories we receive across the different samples. So the orange sample is that 1.2 million sample, which we received up to the end of 2023. And then the purple sample is the first set of the 5 million sample, which didn't have quite as many categories as our current sample, which is version 3. So you can see that there is a lot more detail in the expenditure within the current 5 million sample. We can see things like expenditure on petrol and fuel, expenditure on hotels, savings, for example, which we weren't able to receive before. So there's quite a lot of detail within the data. The data in this format is available through our trusted research environment for academic and policy research. There is a process to go through. There's an application process and an ethics process to go through to get access to this data to work on in the trusted research environment. Because of it, it's obviously quite sensitive. So to make the data more accessible and more usable, we go through an aggregation process on top of the process that NatWest go through. So we receive the data from the bank, we then aggregate it based on certain themes or topics. So for example, overdrawn accounts, or the proportion of people whose balance drops below £100 on 2 or more occasions within the month. We use that aggregation to then create indicators and data sets. Those indicators are then put into our Economic Wellbeing Explorer for local authority insight and research, and the aggregate data sets are hosted within our data catalogue. All of that is available through My Foundry, and there'll be a link at the end of this presentation for you to then go and explore those data sets and request access to the Economic Wellbeing Explorer. So that's the process that we go through. And so today we're here to talk about our new Benefits Reliance indicator, and I'll talk you through how we have created that indicator. If I can move my screen along, there we go. So we worked with local authorities to come up with an indicator that would be meaningful for them to use in their work. And so we use income category data to assess the proportion of total income coming from certain means tested benefits. And those benefits are universal credit, housing benefit, and tax credits. And what the Benefits Reliance indicator shows is the proportion of people within an area for whom these benefits make up 20% or more of their total income. So it could make up 22%, it could make up 56%, it could make up 98%. All of those people are captured within the indicator. And it's, this is because the 20% threshold was felt to be something where people are reliant on those benefits to a greater or lesser extent to maintain their living standards. So the 20% threshold indicates that benefits are making a substantial contribution to an individual's income. It can also show people who maybe don't appear as vulnerable through their employment status. So they might be economically active, but we know about a third of people who are claiming universal credit are in work. So this indicator can help to explore that a little bit more. And it can also work as an early warning signal. Because the data is sent to us weekly and we update it into the Economic Wellbeing Explorer monthly, we can see trends emerging quite quickly. So you can see at quite a granular level where reliance may be increasing or where it's decreasing. So you can see the impact of policy decisions or of economic changes quite quickly. So some initial insights from the national level with Great Britain. So you can see overall things are trending up across the 3 nations. So Wales has got the highest proportion overall, but its trend line is slightly slower than that of England and Scotland's trend line is actually the one that's going up the fastest. So 1.2, just over 1.2 percentage point increase over the last 12 months. And we're able to dig into this in a little bit more regional detail as well. So all of these graphs come from the time series within the Economic Wellbeing Explorer, which Hui will show you when he demos the local data to you. So within Wales, we can see that Southeast Wales is well above the kind of national trend for Wales, but there's a kind of similar increase across all of those regions within Wales. In Scotland, West Central Scotland, which includes Glasgow and the Greater Glasgow area, as well as some island communities, has the highest proportion of benefits reliance in Scotland. But I think most interesting is this trend in Eastern Scotland, where there is quite a sharp uptick at the end of 2025, start of 2026. And that's the area that includes Dundee, and there are some quite well publicised labour market challenges in Dundee at the moment. Highlands and Islands and northeastern Scotland are kind of well below the average for Scotland. Should be noted that the population in that part of Scotland tends to trend a bit older, and obviously this indicator doesn't include pension credit. So I think it would be an interesting challenge for us to see how this changes if we were to include pension credit within the calculation as well. I've broken England down into northern and southern England, so almost all the regions of northern and mid England are above the national trend for England, with the northeast having the highest proportion at almost 10% of our sample in that population having been deemed as being benefits reliant. And then we compare that to southern England, only London is above the trend for England, which kind of makes sense given the kind of makeup of London, with the southeast and southwest being well below the national trend. So I'll now hand over to my colleague Hui, who will show you how we apply this within our Economic Wellbeing Explorer tool. It's kind of a mapping tool that enables you to explore at a much more local level. And then we'll come back for a little bit more discussion about what we can do with the data, and then there'll be plenty of time for questions at the end as well. So you can take control of the screen now, Hui.
Will do. Just to clarify, I was looking at the questions in the chat. This is individual level data. The NatWest sample is all individual level data. There were some questions about differentiation between individual level and household. So just to clarify that one, because it will be relevant for demonstrating the data. So this is the Economic Wellbeing Explorer, as Charlotte mentioned. So she briefly explained how we take the data from our trusted research environment and create some metrics. So those metrics can then visualize here in the Economic Wellbeing Explorer at different levels. So today, of course, we're focusing on the benefits reliance metric, but just to have a quick overview of the other ones, we look at people with overdrawn accounts, so people going into negative balance twice or more. We look at people living beyond means, so people spending 20% more of what they've received any given month. People with low emergency resilience, which is usually the one we see the most percentage across all Great Britain, and that means people that have less than £100 twice or more over the month. So looking at different ways that people might be struggling, different ways people might be managing their finances. And of course, this is all individual level data, so it isn't take into account necessarily all the incomes into the household. Now today, of course, we're launching the Benefits Reliance, as Charlotte already explained, people that have at least 20% of their income coming from those three benefits presented in the slide. The reason, then this was another question, the reason we've decided to use means-tested benefits was because this was to support a use case from one of the local authorities we already work with in the Economic Wellbeing Explorer. You know, as you've seen from the categories of the data, albeit it was quite a lot of content that was passed through, but we can share the slides after. There's the possibilities of doing more and including other types of benefits as well. But to support the specific use case with the council, and that's how we always work in collaboration with our subscribers to actually define what the use case is and what the best metric is. That's what was decided. Harry is here as well, so we can have a little bit of a discussion about that process with the local authority at the end. So as I mentioned, once you click on one of these cards, you can see all the indicators. And we update this data every month with a month's delay. So we receive the data from NatWest every week, give us some time to process and to put it in the dashboard. We have the month's delay. So you can see that you're looking at the data from the end of March, and in the next, it's actually going through QA now. We'll be updating it for the month after. And you can see that we have very significant amount of individual current accounts across England, Scotland, and Wales. We don't have any Irish data, but across the three nations. So for England, we have nearly 4 million customers, which equates to 7% of the population. If you go to Scotland, it's a little bit higher representation, maybe being Royal Bank of Scotland, which is about 10% of the population. And to complete the picture, show you Wales as well, which gives us 7% of the population. So this is looking at the metrics at national level. Once we zoom in, we can also look, the data starts splitting into different areas of the country. So here we're looking at the differentiation between different regions. And the way the dashboard works is that the bigger the circles, the more people in that specific metric. So the more people in Benefits Reliance in this case, but if I go across to, let's say, living beyond means, you'll see that the picture changes and the size of the circle changes. So quite easy to visually understand quite quickly which areas might be struggling the most. Now there's a lot of colors as well, and I'll come to the colors in a little second. But for the financial metric, we're looking at the size of the circles. So if I zoom in even more, then it gives us data for each of the individual local authority districts. So here, the size of the circle becomes a lot more significant than in the regions, which aggregates a lot more and kind of goes equates across the different areas. But when we look at the local authority areas, that starts being quite significant, the size of the circle. So we can quite easily visualize which areas of the country have more people from our sample in Benefits Reliance or in low emergency resilience or any of the other metrics. What we can also do is we have a couple of filters. We can filter by age ranges. So one of the questions was about working population or pension age too. So the dashboard allows you to kind of focus on different age groups and filter it in that way. Or by income bands as well. So if I put over 40K here, as you'll imagine, the Benefits Reliance will significantly reduce for people that are making over 40K. Whereas if I put people that are making under 25K a year, then the picture changes completely. Now, the way we're working with local authorities makes it really important that the granularity of the data is as significant as possible. So as we zoom in into the different local authorities, we can see there's the different levels. So in Scotland is intermediate zone and data zone, in England is LSOAs and MSOAs. At the moment, we're at LSOAs. The data is possible to go to the more granular level, but there's always a consideration between representativeness and granularity. So we're constantly working that through, and hopefully more news in the future about we can go to more representative and more granular. But going back to the size of the circles, once we go into that, let's call it the neighborhood level, then we can see the stark differences between different areas of the local authority. So from the really small circles, which gives us about 3 to 5% of 2 to 5% of people in Benefits Reliance, to the really big circles, which some areas are 25% of people living in that area from our sample in Benefits Reliance. So it really starts painting the picture of how Benefits Reliance is distributed between different areas of the local authorities. This is Birmingham and the West Midlands Combined Authority all together. For individual local authorities that might just see their local area in their subscription. What you'll also notice is that there's some donut-shaped circles here. So the reason for that is because when there's less than 10 current accounts in our sample, in this case showing Benefits Reliance, we hide the data. So just to protect identity of people. It still tells you something. It tells you that from our sample, there's less than 10 people in Benefits Reliance in that specific area, but you just don't know the difference between if it's one person or 10 people. So we don't give you the percentage of the people. And then of course it works like I showed you before. You click on any given circle and it gives you the full card. It tells you the specific sample, how representative it is, and the different financial indicators for that neighborhood area as well. Now I mentioned I'll come back to the colors. So as we work through with local authorities, we've realized that the real power of our data set comes alive when we start cross-matching that and overlaying that with different data sets. So we've started incorporating initially open data sets, so census data, for example, on the demographics. So here in this case, we're looking at the percentage of the percentage of people living in each of the areas with some sort of disability or long-term health issue. It's very relevant to compare that to Benefits Reliance, of course. And there's the way we work through again is with our partners, with the local authorities, with our subscribers. We try to understand the use cases and what data sets might be useful to then incorporate into the Economic Wellbeing Explorer. So we've worked with teams in child poverty, for example. So we've added data sets like families with dependent children and birth to mothers under 18%, for example, 18 years old. And youth population. This is all data from the census. We've also worked with local authorities looking at housing and homelessness. So we've added the EPC ratings. So every household with EPC rating less than C, it's marked here. So you can see the purples. So the logic of the colors is that the purples is the more and the yellows is the less. So you can see quite a drastic picture in a lot of areas within the local authorities here in the area. So a lot of purple circles, which means there's a lot of homes with poor energy efficiency from the open data that we can see. We also work in employability use case, which is sort of the origins of this metric as well, the Benefits Reliance to look at employability and how the councils can support different employability programs and assistance and access to skills, access to CV rating services and things like that. So we've brought in qualifications. So this is looking at the maximum qualifications achieved and from no qualifications to further education across the areas, including apprenticeships as well. So you can navigate the data, cross-match that with the Benefits Reliance or any of the other metrics that we have created along the way. Now, lastly, and I won't be able to show you this for this area specifically, but I can talk through which kind of data sets without allowing you to see the data. Lastly, and this was an addition that came through working with use cases with the local authorities. We've realized that it'd be useful to integrate data from the local authorities as well. So with some of our partners, we have worked with them to receive some of the aggregated data that they have on things like grant take up or service take up from the local authority. Bring that into the trusted research environment at aggregated level. So all of it is very DPI compliant. Because it's at aggregated level, is data that could possibly be published. But then we bring that into the trusted research environment to then integrate that into the individual subscriptions for the local authorities so they can compare the financial metrics that we have with things like how many people receiving money advice and rights from the council, how many people in council tax indebtedness, rent arrears for council, tenants, universal credit uptake from the data that the council receives, I think from, if I'm not mistaken, from DWP, which I think we might have some people in attendance today, people receiving free school meals and so on. So a variety of different data sets from the local authorities to support a variety of different use cases as well. Now, because we update the data every month, we have a timeline, so it allows you to go and go back in time, figuratively, and try to understand how things progressed. Since we have, so remember when we saw the different colors on the categories, you saw there's different samples of the data. So this allows you to go back to that green sample, so the 5 million with all the different categories. The data in the trusted research environment is available from the beginning, albeit with a smaller sample, of course. But for the dashboard, that's how far back, so around the beginning of 2024. You've seen a glimpse of this, so I won't labor too much on this, but you can also use the time series to actually select the time period, and you can compare, let's say, different areas from local to national to the neighborhood level. So this allows you to put things in perspective. So you're not just looking at data points individually, but looking at national averages, looking at local averages, and comparing how things are positioned. You can use the filters that you've seen before, and you can look across the different metrics as well. And you can also look at a yearly comparison. So probably useful if I add 2024 here. So here we're looking potentially at different seasonal differences across the data metrics. So not expecting to see much of that in the Benefits Reliance, but in other metrics this becomes quite a telling thing. So if I show you quickly people living beyond means, will show there's it's quite a big difference between 24 and 25 in people living beyond means over the summer. So a lot more people in 2024 were living beyond means than in 2025. So maybe pointing to some loss of consumer confidence over that period. And we also have a ranked summary here. I have way too many subscriptions for this to make any sense, but for the local authorities or the users that have more tailored subscriptions, you'll see the top 5 and the bottom 5 for any given metric, and you'll see how it's trended across any timeline that you select here. Lastly, in the resource page, all of this is explained, how we've come to the different metrics and the sources of the different contextual data sets that you've seen before. And if I believe there'll be a link in the last slide to join our platform, see some of the details of the data, but you can also request access to the Economic Wellbeing Explorer. This free tier access will only give you access to the national and the regional metrics. If you'd like to discuss how to get access to more individual granular metric, I'd be happy to have a follow-on one-to-one conversation with you and discuss how we can make that possible. I'll go back to Charlotte then for a quick roundup, and then we'll jump into some questions.
Can I ask one question just while you still got this on the screen? There was a question in the chat which I think is best shown on the map. We have a question about the representativeness of NatWest customers, which comes up in a little pop-up.
Yeah, so it's 7%. We have 7% of population, so 4 million across 56.5 million in England. It varies across different areas. So in Scotland it's a bit higher. We have over 500,000 for 5.5 million of population, so around 10%. But once you zoom in, you can always see for the specific car that you open, you can always see the different representativeness over there.
And just to add to that, we've also just completed some work for the Scottish Government on the representativeness of the data in Scotland across, some of the demographics and age groups and gender and things, and we'll be publishing some of the outputs from that shortly. So and then there's the opportunity for us to then expand that work into the representativeness in England and Wales as well. But we were very pleased with how representative the data was across those various different categories, as well as the overall representativeness within, as a proportion of the population. Back to me anyway. So Hui's already shown you quite a lot around the contextual data. So I think I just want to highlight one thing on this slide before I move on, and that's that from a research perspective, there's lots that can be done with connecting administrative data and survey data with the financial data for kind of more in-depth research. And I just want to point you to a recent working paper that was published by the Institute for Fiscal Studies. They used the financial data alongside surveys to investigate how this data could be used for better estimates about local living standards, and they concluded that it could be used for that purpose as part of the working paper, and it includes kind of like quite a lot of detailed methodology about how they went about that as well. So they'll be hopefully doing more research utilising the data onto very local level living standards and utilising financial data for looking at kind of economic trends as well. So just to kind of wrap up with some applications, so for local authorities, you can use this data for that kind of like early warning signal, identifying emerging pressure, monitoring the impacts of decisions that have been taken. NGOs can use it to understand local need in kind of a bit more detail, prioritise outreach and support. And then at the research level, it's kind of like devising and evaluating interventions, and monitoring those kind of regional and local trends as well. So before I wrap up, we do have more indicators in development. So we will be releasing a fuel poverty indicator in the next couple of months, and that's tracking energy bills as a proportion of overall expenditure. We'll be looking at housing affordability, so what proportion of someone's income is their housing costs, and that's on rent or mortgage payments. We'll be looking at income growth over time and average income, and also a benefits outliers indicator is in the works as well, which is looking at the proportion of people whose benefits have increased by 10% or more over the average for their area. So is there a particular area within a local authority where this is increasing above the above the average? And we're also introducing some new features into the Economic Wellbeing Explorer and the data catalogue as well. So API access will mean that you'll be able to extract aggregate data into your existing systems to work alongside your own data. So you'll be able to access the map as well as then extract the data for kind of maybe a bit more detailed work. We'll also be adding the ability for you to ask questions of the data within the tool. So, natural language interactions, so you can receive insight much more quickly. And what we'll also be able to do is show you how that insight has been generated, so you can sense check the outputs as well. And also data zone level extracts, and so provides a bit more granularity for our geographically based indicators as well. So we'll head on into Q&A, but if you want to access the data catalogue, if you want to request access to the Economic Wellbeing Explorer and explore this data for yourself, there's a QR code there for you to use. You can also go via our website, and I think Kimberly's just dropped a link into the chat as well if you want to use the link. And then you can create your MyFoundry account, and then you can request access, and what we'll do is we'll approve that access as quickly as possible, so you can start exploring. But yeah, thank you all very much for your time, and yeah, we're happy to answer any questions that you might have now. Charlotte, haven't gotten to in the Q&A.
Charlotte, can I ask you stop sharing your screen so we can have everyone on the screen just to see? I think I have to unmute everyone if you want to ask a question. So if you want to pop your hand up, if you want to ask a verbal question, I'll keep an eye on that. But otherwise, there's just a couple of questions in the chat that I don't think have been answered. There's a question from Dave asking about the possibility of merging the data set within the LA home analytics, which I'm afraid I don't understand that, and that's why there are much cleverer people on the call to answer these questions. Who?
I actually don't fully understand. One of the things, so if you want to clarify how, so I don't understand the merge part of it. So do you mean merging the different metrics into one metric? Or do you, on the second part of it, to utilize with local analytics, local authority analytics tools, as Charlotte mentioned, we're developing the API for the individual metrics, so you'll be able to call on those metrics to your, for example, your local Power BI instance. But I don't fully understand the merge the data part of it. So Dave, if you don't mind.
Yeah, it's rather than having two sets of data in two different places, if you would consider having the information or sharing that information with the local authorities so we could get that added to, or is it just you want to keep it separate? That was really all.
So yeah, I think that'll be possible as we develop the API. So we'll be out for testing in the next few weeks or so. And for initially, it's just about bringing allowing you to call for the individual financial metrics into your local analytics tool of choice. But I think there's plans to take feedback for that API and then see how to best serve that. So not at the moment, but more on that in the next few weeks, and then hopefully we'll start gathering feedback and improving that.
Okay. There's another question about if we have a little bit more information about our fuel poverty metric.
Might be best for Harry, that one.
Harry, are you able to answer that, please?
Yeah, so at the moment that's still under development, but I can go into a bit more detail on what that one will show, where we're taking the total expenditure customers are spending on fuel payments, which is included as a specific category in the data, comparing that to the total income for that customer. And similar to what we saw for the benefits indicator there, it'll be a different threshold, but where this one showed customers with more than 20% of their income coming from benefits, the fuel poverty metric would show customers with greater than a certain percentage of either their total income or income from a certain category going towards fuel payments. So yeah, we don't have that one to directly to access at the moment, but once it is developed, as Hui was discussing, that would also be added long term to the data API for access and added to the EWE potentially as well.
That's great, Harry. Dave, you had your hand up.
Yeah, I was just interested to find out if the information you get for how much is spent on fuel poverty from the actual money taken from someone's bank, or are you asking the question from them? Because a lot of people obviously just have cash and they pay that separately.
Yeah, so that's that's really interesting point, and yeah, something that's being developed alongside another group as part of another project for that fuel poverty spend, where yeah, in the data we only see data that's being taken from someone's bank account, so it's probably more likely to be kind of direct debit payment for fuel. But in working with data from fuel providers directly, being able to compare fuel usage to money spent on fuel in different areas should allow us to see where places are more where the data we're seeing for fuel spend is more representative of whether that's the total amount people are spending on fuel, or whether there's that's coming from other sources. So yeah, we know there's going to be differences in different areas on whether people are using more conventional fuels or less conventional fuels and how they're paying for those. But yeah, the metric that we'll be developing will be looking initially at only spend that's coming from their current accounts, essentially.
Yeah,
Sorry, Dave.
No, it's okay. I was just going to say, because about 18% of people in Scotland have prepayment meters, so that takes a big chunk out of that equation when you get looking at figures. That was all.
Malcolm? Sorry, Carol, I'll get to you next.
I think you might be muted, Malcolm.
Yeah, Malcolm. Shall we go to Carol and come back to you, Malcolm, because we can't hear you. Carol, you've got your hand up.
I've allowed both those microphones. For some reason, they weren't allowed. So you should be able to ask your questions now. Apologies.
Okay. Thank you. Did Caro want to go first then?
I'm happy for you to go first.
Okay, all right. I wanted to pick up actually on some of the points that were just being raised there, which was about it's not just the fuel poverty side, is it? That cash is just becoming slightly more popular these days than it used to be, and a return back to jam jar sort of budgeting. So that is going to probably be a little bit. I don't see it as a blocker, but I mean it is going to be an issue that we need to kind of find some way of adjusting for. And I guess probably the other question was that you're using NatWest data. Are you planning to use more than just NatWest data by any chance? I mean, people like Starling, etc. They've got a pretty big footprint in the poverty area because they're so easy to use, and there will be a big difference between the way that older people, particularly older pensioners, manage their finances versus younger people.
Yeah, so to answer the second part of your question, like we are kind of actively working to kind of develop more data partnerships. Obviously it can take quite a long time for these partnerships to come to fruition because there's not like a mandated framework for banks to follow, and it's quite sensitive. So we are in kind of advanced conversations with a number of banks, and we would absolutely love to get some of the kind of challenger banks in this data set alongside more established banking groups like NatWest. And then to your first point about cash, and like we recognize that is potentially a gap within this data set, but you're not going to, I don't think there's, it's kind of one of the trade-offs, I guess, that you have with using any kind of data source, is that it's not going to be 100% of everything. So I mean, I think it's something that we're aware that we need to look into how we could look at. We do get cash balances, we get minimum maximum, so we could look at what's the overall expenditure and how much of that could be cash if we can't see it in the bank in the digital transactions. But we need to do quite a lot of work, I guess, on how we would work that out. I mean, I'm not a data scientist, so I might have just put Harry in it, but
but sometimes direction of travel is better than nothing at all.
And so this is, the data that we've got, I think it's kind of for trend identification and trend analysis, rather than, looking at like individual households or individual people within a data set. Yeah. Sorry, Harry, you were gonna say something.
Yeah, no, absolutely. Just to say I agree basically that we're kind of aware that we're getting a subset of a customer's or a person's financial transactions, even their digital transactions that they may be banking with other banks as well as NatWest, but that to your point as well, Malcolm, that we're seeing that we're not seeing we do see trends in the data that indicate maybe not something that you can tie directly to an exact rate, but that is comparable between different areas. We're not seeing that things are homogeneous across different areas, and we also see that things change differently in some areas to other areas. But it is really important to analyze, if we do see an increase in a certain rate for a certain metric, does that correspond directly to some like a real world scenario that we might be envisaging? And we're aware of when developing these metrics, we're using smart data, which is not being collected specifically for measuring the metrics that we're showing, but they can be an indication or a proxy for a more real world measure, I guess.
I can see your brain working there, Harry, as you're speaking.
Well,
I should have had a better answer prepared, because it is a very important point.
Well, we can always just moving on. I'm just keen that we're actually just spot on our time, so I'd like to go to Carol and then to Abigail, please.
Thanks. I'll try and make this quick. Firstly, I just missed out on the percentage you were looking at in the fuel poverty indicator. Was that 10% of income?
So we haven't settled on a specific percentage there, and it may not be a sort of set percentage. It might make more sense for it to be something relative to an average for particular areas, but it would be a similar idea to the benefits indicator we've looked at today, where it would be looking both at absolute fuel expenditure and that fuel expenditure relative to income or expenditure in different categories, such as committed expenditure for individuals in that area.
Yeah, and presumably that would be after you take out the housing costs as well.
Yeah, I think that would be an important thing to include in there.
Yeah, thank you.
Thank you. Abigail?
Great, thank you. A really interesting presentation and great to hear more about the data. And of course, no data set is perfect, so it's really important for us to understand, where the strengths and weaknesses are with them. I was a little, I suppose, just coming at it without having a thought for what the percentage might be with 20% reliance on means tested benefit. I kind of think it looks a bit low, and so that's why I'm sort of been pressing for thinking about whether you want to try and estimate what the rates would be in Family Resources Survey. It'd be quite nice to see what are your estimates for those on means tested benefits. Once you're on means tested benefits, then it's very unusual for them not to make up more than 20% of your income because it's means tested. There are people on the taper, obviously, with universal credit where it might be lower, but I would have thought that the bulk being on a means tested benefit would be higher. So I'd like to sort of see those sort of who's on means tested benefits and then the different percentages as you go up the scale in terms of percentage of their income, just to see if there's something funny about that 20% cutoff. That would be really interesting. And of course, you probably can't get at this. There's quite other people have been asking about individual versus households. Of course, for universal credit, you're on joint claims, and it might be just being paid to one person in the household. So that's another way. It could go the other way, where some people looks like they're not getting any universal credit, for others it looks like they're getting lots of universal credit. It's just something to think about. But overall, thanks, really interesting presentation.
Yeah, thank you very much, Abigail. I think obviously this is the first benefits indicator that we've released, and we're aware that the 20% probably captures obviously captures quite a lot of people. So it's really good to get feedback that having kind of the gradations through, and I think maybe having like a 50% one and maybe a 60 or 80% one. So that's something that we can definitely feedback and put into our roadmap and see when we can release something like that. So thank you.
Yeah, I think something that you touched on there and also in the comments as well was the difference between the recording of benefits take up versus, or people who are eligible for receiving benefits versus who's what we see in the data for people receiving those benefits. And that was something that was discussed in consultation with the local authorities while developing this. That would be interesting to look at. I think one point is that the data that we get from NatWest is obviously very good, but they're always working to improve the way they're categorizing the income they get from different sources. So I don't know the full details of this, but it's obviously not as straightforward as seeing a transaction and being able to put that in one bucket or another. So yeah, they're always improving the way that they're classifying the different income that they see into different benefits categories. And as they do that, we should see we should be able to more clearly differentiate between income that's definitely from these benefits categories that match up with what we might see in Department of Work and Pensions as well.
Do we have any more questions? I think we've answered everything in the chat at the moment, and we're running just over time at the moment. So if there aren't any more questions, I'm just going to say thank you very much to everyone for joining us today, and for our presenters for walking through what we talked about, answering all the questions, Harry, Hui, Tim on the chat, and Charlotte for presenting. If there are any additional questions that you think of afterwards, please don't hesitate to get in touch with us, reach out on the contact form on our website, and please do use the link if you want to go and have an explore and set up an account. And I'll just say thank you very much to everybody. Thanks.
Thank you very much, everybody.